$334 billion. Let that number sit with you for a moment. $334 billion. That's how much cash Warren Buffett is sitting on right now. The greatest investor who has ever lived, the man who has beaten the market for 6 straight decades, is choosing to hold more cash than the entire GDP of Finland. He's not buying stocks. He's not chasing AI. He's not listening to Wall Street's "everything is fine" narrative. He is hoarding cash like a man who sees a storm that nobody else can see. And here's what's going to keep you up tonight. The last 2 times Buffett hoarded cash like this: 2007, right before the financial crisis destroyed the global economy; 1999, right before the dot-com bubble wiped out $5 trillion in wealth. So the question isn't whether something is coming. The question is, what does Warren Buffett know that you don't? Stay with me, because what I'm about to reveal, including a deep China connection that Buffett has never discussed publicly, could be the most important financial analysis you hear this year. Warren Buffett is hoarding cash again. What does he know? Prosecutor presenting evidence. Before I tell you what Buffett knows, let me show you what he's doing. Because Warren Buffett doesn't give interviews telling you his next move. He doesn't tweet. He doesn't go on podcasts. He speaks through his actions, and his actions right now are screaming. Evidence number 1, the selling spree. In 2024 alone, Berkshire Hathaway sold over $134 billion worth of stocks. Not small positions, not trimming around the edges. He dumped half his Apple position. Apple, the stock he once called the best business in the world. He sold massive chunks of Bank of America, a stock he held for over a decade. He reduced positions in Chevron, HP, Paramount, and several others. Now, think about that. When a man who is famous for saying, "Our favorite holding period is forever," starts selling at this pace, something has fundamentally changed in his calculation. Evidence number 2, the buying freeze. Here's what's even more telling than what Buffett sold. It's what he didn't buy. Berkshire Hathaway, a company that generates over $30 billion in operating earnings per year, has essentially stopped making major acquisitions. No big deals, no massive stock purchases, no aggressive moves. At the 2024 annual meeting, Buffett said, and I quote, "I don't mind at all, under current conditions, building the cash position." Under current conditions. What conditions, Warren? He didn't elaborate. He never does. But the data tells the story he won't. Evidence number 3, the Treasury bet. Here's the detail that most analysts completely miss. Buffett isn't just holding cash. He's holding short-term U.S. Treasury bills. Berkshire now holds more T-bills than the Federal Reserve itself. Read that again. Warren Buffett's company holds more short-term U.S. government debt than the United States Federal Reserve. Why short-term? Why not long-term bonds? Because short-term T-bills give you 2 things. 1, a safe 5% yield while you wait. 2, instant liquidity when the moment comes to strike. Buffett isn't just being defensive, he's building a war chest. And in my 15 years of studying financial markets, when the Oracle of Omaha builds a war chest of this size, something massive is coming. Lean forward, lower voice. Let me tell you what's really happening, energy. Now, let me take you behind the curtain. Because I've studied every Berkshire annual letter, every shareholder meeting, every SEC filing, every public statement Buffett has made in the last 3 years. And when you piece it all together, a picture emerges that is both brilliant and terrifying. Buffett sees 4 major threats converging at the same time. Threat number 1, extreme market overvaluation. Buffett's favorite market indicator, total stock market capitalization to GDP, which he once called the single best measure of where valuations stand, it's currently at 195%. For context, in 2000, before the dot-com crash, it was 140%. In 2007, before the financial crisis, it was 110%. The historical average? Around 80 to 85%. We are at 195%. That means the U.S. stock market is valued at nearly twice the entire American economy. Buffett has never aggressively bought stocks when this indicator was above 120%. At 195%, he's not just cautious, he thinks prices are insane. Threat number 2, the interest rate trap. Here's what most people don't understand about the current economy. The Federal Reserve raised interest rates at the fastest pace in 40 years. And those rate hikes? Their full impact hasn't hit yet. There's something economists call the lag effect. It takes 18 to 24 months for rate hikes to fully work through the economy. That means the real pain from 2023 and 2024 rate hikes, it's hitting right now. Commercial real estate loans are resetting at rates double or triple what they were. Corporate debt refinancing is becoming brutally expensive. Consumer credit card debt just hit $1.14 trillion, an all-time record, at average interest rates above 22%. Buffett sees an economy that is drowning in expensive debt, and the water is still rising. Threat number 3, the AI bubble. Now, this is where Buffett's genius really shows. Everyone is obsessed with artificial intelligence. And look, AI is real technology. It will change the world. But Buffett has seen this movie before. In 1999, the internet was also real technology. It did change the world. But the stocks were absurdly overvalued. Cisco was trading at 150 times earnings. Today, Nvidia is trading at levels that require perfection for the next decade just to justify its current price. Buffett's rule has always been, never pay an insane price for a great business. The AI trade? Right now, the prices are insane, and Buffett wants no part of it. Threat number 4, and this is the big one, China. What I'm about to share with you is the analysis that connects all the dots. This is the part that no mainstream financial channel will tell you, and it's the real reason Warren Buffett is hoarding cash. China secret number 1, the $3 trillion collapse. China's real estate market, which represents approximately 30% of China's entire GDP, is in the middle of the largest property collapse in human history. Evergrande, Country Garden, Vanke, dozens of developers either bankrupt or on the edge. Over $3 trillion in value has been destroyed. But here's what the media won't tell you. This isn't contained. American banks, European banks, and global investment funds have deep exposure to Chinese property bonds and development projects. The interconnection between Wall Street and China's financial system is far deeper than anyone publicly admits. Buffett? He started pulling money out of Chinese-connected investments 2 years ago. He sold his entire BYD position down significantly, a Chinese company he held for over a decade. He saw this coming. He got out early, as he always does. China secret number 2, the silent bank crisis. This is the one that should genuinely worry you. China's regional banking system is under catastrophic stress. Over 4,000 small and mid-sized Chinese banks are in financial distress right now. The Chinese government has been quietly merging and bailing out these banks, but they can't do it fast enough. Now, why does a Chinese banking crisis matter to an American investor? Because of something called dollar-denominated debt. Chinese companies and Chinese banks owe approximately $2.1 trillion in US dollar-denominated debt. When Chinese banks fail, when Chinese companies can't pay their dollar debts, that creates a massive demand for US dollars, which strengthens the dollar, which crushes American corporate earnings overseas, which tanks US stock prices. This is the domino chain that Buffett sees, and it's already in motion. China secret number 3, the de-dollarization chess move. While China's economy is struggling internally, externally, Beijing is executing a long-term strategic plan to undermine the US dollar's dominance. They're doing it through BRICS expansion, bringing Saudi Arabia, UAE, Iran, Egypt, and Ethiopia into an economic alliance designed to trade outside the dollar system. Yuan-denominated oil deals. China is now buying oil from Saudi Arabia, Russia, and Iran using the Chinese yuan instead of dollars. Central bank digital currency. China's digital yuan is the most advanced CBDC in the world, and it's designed to create a parallel payment system that bypasses the US-controlled SWIFT network. Gold accumulation. The People's Bank of China has been buying gold every single month for over 18 consecutive months, building reserves at a pace that signals preparation for a new monetary order. Now, will they succeed in replacing the dollar overnight? No. But Buffett doesn't think in terms of next quarter. He thinks in terms of next decade. And over the next decade, the dollar's role as the world's reserve currency will face the most serious challenge it has faced since Bretton Woods in 1944. Buffett's cash position, his treasury bill fortress, it's not just about market overvaluation. It's about positioning for a fundamental shift in the global financial order. China's secret number 4, the Taiwan equation. I need to tread carefully here, but this must be said. China's military buildup around Taiwan is not a bluff. The Chinese military has conducted more exercises near Taiwan in the last 2 years than in the previous 2 decades combined. Semiconductor manufacturing, specifically TSMC in Taiwan, produces over 90% of the world's most advanced chips. If China blockades or invades Taiwan, even partially, it would trigger a global semiconductor shutdown, the most severe supply chain crisis in modern history, immediate sanctions that would dwarf anything imposed on Russia, a potential military confrontation between the world's 2 largest economies. The economic damage would make 2008 look like a minor inconvenience. Does Buffett think this is certain? Probably not. Does he think it's possible? Absolutely. And when you're managing $900 billion in assets, you don't bet against tail risks of this magnitude. You hold cash, you stay liquid, you wait. Exactly what he's doing. Segment 4, the Buffett Playbook. Shift to empowering, coaching tone. Here's how you win. Now, here's the part where this analysis becomes directly actionable for you. Because understanding what Buffett sees is only half the equation. The other half? Doing what Buffett does. And Buffett's playbook in moments like this has been remarkably consistent across 6 decades. Buffett Playbook. Move number 1. Accumulate cash before the crisis. Buffett doesn't wait for the crash to start building cash. He builds cash while everyone else is euphoric. In 2005, 2006, 2007, while Wall Street was partying, Buffett was building cash. Then in 2008, he deployed that cash into Goldman Sachs, a deal that made him $3.7 billion in profit. Bank of America, a deal that made him over $15 billion. General Electric, at fire sale prices with preferred stock terms that no one else could get. The lesson? Cash isn't lazy. Cash is power. Cash is optionality. Cash is what allows you to buy when everyone else is forced to sell. Buffett Playbook. Move number 2. Focus on businesses, not stocks. During a market downturn, Buffett doesn't buy cheap stocks. He buys extraordinary businesses at fair prices. There's a massive difference. He looks for companies with durable competitive advantages, moats that competitors can't cross. Pricing power, the ability to raise prices without losing customers. Low debt, companies that can survive any economic environment. Essential products and services, things people need, not want. Strong management, leaders who think like owners. Right now, before any crash, you should be building your watch list of these kinds of companies. Because when the downturn comes, and it will come, you need to already know what you want to buy. Buffett Playbook move number 3. Be greedy when others are fearful. This is Buffett's most famous quote, but almost nobody actually follows it. Why? Because fear is contagious. When the market drops 30%, when CNBC is screaming panic, when your portfolio is bleeding red, every instinct in your body screams sell. But that is the exact moment when generational wealth is built. Buffett's $334 billion cash pile? It's not a defensive position. It's an offensive weapon, waiting for the right moment to strike. And when that moment comes, he will deploy that capital with speed and precision that will make Wall Street's head spin. The question is, will you be ready to do the same? Buffett Playbook move number 4. Think in decades, not days. Here's the mental framework that separates Buffett from 99.9% of investors. He doesn't care about what the market does tomorrow, what the Fed says next week, what the jobs report shows on Friday. He cares about where will this business be in 10 years? What will this asset be worth in 20 years? What is the intrinsic value, not the market price? If you can train yourself to think this way, genuinely, not just intellectually, you will have an unfair advantage over 99% of market participants who are trapped in short-term thinking. Segment 5. Your action plan. Direct, specific, do this now energy. All right, let me give you the specific action plan based on everything we've discussed. These are 5 steps you can take this week. Step 1. Calculate your cash position. Right now, today, open your brokerage account and calculate what percentage of your portfolio is in cash or cash equivalents. If it's below 15%, you're likely overexposed. The smart money? They're running 20 to 30% cash positions right now, some even higher. You don't need to go to Buffett's extreme, but you need a meaningful cash buffer. Step 2. Audit your risk. Look at every position in your portfolio and ask one question. If this stock dropped 40% tomorrow, would I buy more or would I panic? If the answer is panic, that position is too large or too speculative for this environment. Trim it, reduce it, protect yourself. Step 3. Build your dream watch list. Create a list of 10 to 15 world-class companies you would love to own at the right price. Companies with strong balance sheets, consistent cash flow, market dominance, dividend history, competitive moats. Write down the price you'd be willing to pay for each one. Set alerts, then wait. Patience is the most underrated skill in investing, and it's about to become the most valuable one. Step 4. Eliminate debt. This is the step nobody wants to hear, but in a high interest rate environment heading into potential economic turbulence, debt is a killer. Pay off credit cards, reduce unnecessary loans, build an emergency fund of 6 to 12 months of expenses. Buffett runs Berkshire with zero net debt. There's a reason for that. Financial freedom starts with financial security, and security means not owing anyone anything when the storm hits. Step 5. Invest in your knowledge. The most important investment you'll ever make isn't in a stock. It's in your own financial education. Understanding how markets work, how valuations work, how economic cycles work, how geopolitics affects your money. That is the edge that compounds forever. And that is exactly what this channel is designed to give you. This is the moment that makes people share the video. Let me leave you with a thought that changed the way I see markets forever. Warren Buffett was once asked what his greatest advantage was. His answer wasn't his IQ, his connections, his access to information, his financial models. His answer was one word: temperament. The ability to remain calm when everyone around you is losing their mind. The ability to think independently when the crowd is screaming at you to follow. The ability to say no 1,000 times and then say yes at the perfect moment. Right now, at this very moment, the market is euphoric. Social media is full of people showing off gains. Everyone feels like a genius. That is exactly when discipline matters most. Buffett has been through the 1973 recession, Black Monday in 1987, the savings and loan crisis, the dot-com crash, September 11th, the 2008 financial crisis, COVID-19, and everything in between. And after every single one of these events, the investors who had cash, had patience, and had courage built generational wealth. The ones who were overextended, over-leveraged, overconfident, they got wiped out. The storm is coming. Maybe in 6 months, maybe in a year, maybe in 2 years. But Warren Buffett, the man who has been right more often and for longer than any investor in human history, is telling you right now through his actions that this is the time to prepare. The only question is, will you listen? Warm, genuine, direct-to-camera connection. If this analysis made you think differently about what's happening in the markets right now, if you learned something here today that you haven't heard on any other channel, then I need to ask you for one simple thing. Subscribe to this channel right now. Tap that button. Hit the bell. Don't scroll past this, because here's what I promise you. Every single week, I will bring you the kind of deep, premium-level analysis that most people pay thousands of dollars to access through hedge fund newsletters and private wealth advisors. The smart money moves, the China intelligence, the geopolitical connections, the Buffett-level strategic thinking, all of it, right here, every week, for free. But YouTube will only show you my next video if you're subscribed. And in a world where financial media is designed to keep you confused, emotional, and clicking, this channel is your anchor. Clear thinking, real data, actionable intelligence. So subscribe now. Share this video with someone you care about, someone whose financial future matters to you. Because the people who prepare, they don't just survive what's coming, they thrive. I'll see you in the next one. Stay sharp, stay liquid, stay ready.